Hey traders, you're welcome back to the channel. If you're looking to take your swing trading to the next level, then you are in the right place because today we are going to be unlocking the best CCI settings for swing trading success. Okay, so let's dive in. First off, let's quickly cover what the commodity channel index or the CCI actually is. Okay, let me just add it to the chart first. All right. Now, the CCI is a momentum based indicator that measures the deviation of the price from its average. Basically, that is what the CCI does. Now, essentially, the CCI helps traders identify overbought or oversold conditions in the market. So, by analyzing the CCI, we can find potential reversal points. For example, when the CCI is in the overbought or when the CCI is in the oversold, we can be able to identify potential reversal points at such scenarios. Okay, and then that can guide us into knowing whether we should enter a buy trade or a sell trade, or perhaps when to exit our buy trade or our sell trade. But what settings should you use for swing trading? So let's just break that down. For swing trading, a common CCI setting is 14 period. That is the default. Okay, the default settings. The default settings is 14, and that is the common CCI settings for swing trading. Now, this means that the CCI will look back at the last 14 periods. Now, we are in the daily time frame, so it means that the CCI will look at the last 14 days because it is the daily time frame. Okay, if we are on the 1 hour time frame, it means it's going to be the last 14 hours. Okay, so let's go back to the daily time frame. So the CCI is going to look at the last 14 periods because we are using the settings with the period 14. Okay, now depending on your trading style, you are going to determine what time frame you want to trade on.